All right, so good morning, everyone. Welcome to our live call here. Today we are looking at backtest of the level trade, Forex trade strategy. So if you guys don't know me, welcome to the call for Anne and everyone else who do know me and have been with me for a while. Welcome back. So today I will share with you, this is me. I am the founder of tradingwithvenus.com website. And today I will share with you one of the setups that I use. It's a signature trade of mine, something that I use all the time. And it's a trade that I see set up pretty much every single day. And it's a setup that's easy to take, it's easy to understand, and it's profitable as well. So let's get started on it. Okay. I am having problems switching my slides, so let me see if I can get out of this. Okay, we'll go manually. Okay, so during this live training this morning, we'll learn, one, how to read price action. I am a price action trader. I do have some indicators, but I don't rely too heavily on indicators. I believe in just looking at what the charts are showing you in terms of price, and then identifying the setups based on that and trading the setups. So that's what I will show you how I read the price action and how you can, take the similar steps to read price action as well, and not rely on lagging indicators to take trades. And for this trade setup, backtest of the level trade, we look at 3 best entry and exit levels for these trades, and where you can take the trades and actually have profits using those. And then I will show you how to implement this strategy and how to, more importantly, make money using the strategy. And then we'll also look at the final step that I believe most traders miss when learning new setups, and how you can use this one single step to really cut your learning curve in half. All right, so first of all, a little bit about me. This is me. My name is Raman Gill. I have been trading live in the Forex for about 7 years now. And during this time, I went through a lot of ups and downs. I have done pretty much everything that you can think about in terms of trading. I have done it. I have taken accounts and grown them from, like, let's say $25,000, which is what I started when I started trading full time. I started off with a $25,000 account, and in just a few months, I think in 4 months or something, I had over $100,000 in the account. And then I took some losses and then built it up again and did that a few times. So I have also blown on the flip side, as much as I've grown the accounts, and I've made thousands of dollars a day, and it was quite nice making that. I have also blown a lot of accounts. I have gone in and just traded really, really horribly. I've made a lot of mistakes, like, there were times when I was trading without a stop loss. I didn't know where to put my stop, so I would keep moving my stop, or I just wouldn't put it in because I was uncomfortable. And I just felt that doesn't matter where I put my stop, they will come get me. So there was really no point. And then there were times when I just got into revenge trading, and I just gave back all my profits. And not only did I give back my profits, I gave back my my principal as well. And having gone through all of this, and I finally came to the understanding that, and also I took a lot of courses, many courses, different strategies that I learned, price action, indicators. Pretty much, if a course is out there, I think I've taken it. The positive side of that is that you really get a deep understanding of the material, because any of the courses that you look at, it's the same thing we're looking at. It's the chart. It's the same price. Nobody has a different price. Doesn't matter how you look at the charts. It's the same price. And doesn't matter what broker you're with. It's the same price that you're looking at, whether you're in UK or I'm here in Canada or wherever you're trading from. It's the same thing. You cannot manipulate the price. Like, we as retail traders cannot manipulate the price. So it's the same thing that you're looking at. It's just different ways of looking at the price, and different ways of basically coming at the market. And that's what the different trade setups and different strategies that everybody, tries to sell us. That's what they are about. And also during this time, I was looking for mentors. When I actually first started in 2010, when I first started trading full time, I tried to find other successful, I'm here in Toronto. I tried to find many other successful, I tried to find any successful traders, really. Somebody who was trading Forex full time and somebody who was successful and actually making money from it. Because I was making money and I wanted to have, basically share ideas with others and see what they were doing and how, I could improve my trading or at least maintain it at the level that I was at. So I had a lot of trouble with that. And I tried to find mentors. I paid people a whole lot of money trying to, wanting to get that mentoring. But I had a hard time. I could not find somebody who was the real deal, who was actually really making money. And doing, and was profitable. So after all of that, I ended up with my own process, really. So the trade setups. So basically, my philosophy on trading is that there are different ways to approach the market. You can have many, many different trade setups that you can take, and people can make money in multiple ways trading Forex. There's no right or wrong way to trade Forex. The only wrong way to trade Forex is the one that makes you lose money. And, I have seen people, I have done a lot of counter trend trading. I have done trend trading. I've done range bound trading. And all these things work because market behaves differently under different conditions. And all you have to do is recognize what conditions you are in. If it's a trending market, then we trade the trend moves. And if it's range bound market, we just, trade within that range. And if it's coming down, then short. I'm a queen of shorting stuff. So, so that's what you do when you can actually see. The bottom line is you have to be able to see a trade setup that you can recognize and you can trade all the time. So that's what it comes down to. And that's what I feel like I have done. Through all this, I have come up with some of the trade setups that I can see clearly and I can take them comfortably. And that's why I will share this one trade setup with you. I'm not sure if you can tell, I'm really passionate about trading. This is really one thing that I truly, love in terms of career. That's that this is what it is. So I will, and in this call here, I'm trying to share my level of trading with you. So, all right. So any questions or comments so far? Anything to add? You can either unmute yourself. I will mute everyone, but if you guys have any questions or comments, please do either unmute yourself and you can talk, or you can just put something in the chat so I can see it.
Raymond, can I just intervene here?
Mm-hmm.
Frank and, I know Frank and Martina, they're both having problems. Frank's just sent me a copy of the screen he gets up, which he said, please wait for the host to start this meeting. It said, if you are the host, I'll log in. But that's all. It said this is a recurring meeting. Please wait for the host to start this meeting.
Oh, you know what? I think he may be in the wrong meeting. Sorry, excuse me, folks. Let's just see. Frank, you know what? The link that we normally use is not the link for this meeting.
Yeah, I can see he's using that one. I've sent him the new link. Okay, I'll go back to him again and remind him that it's a different link.
Yeah.
Sorry to interrupt you there. I'll go back to him again because he would like to be in the meeting.
I know, I would love for him
Yeah,
to.
okay. I'm sorry to interrupt. I'll get back to him again on Skype and see if we can get him in the meeting.
Yeah, and send him the new link because it is different.
Yeah,
so.
I have done that, but maybe he didn't realize it was a new link.
So he may have to close the previous one, and so he says,
okay.
yeah. So. All right, so let's get, and you want to mute yourself, or I can mute you here. All All right. So Frank is actually, somebody who's been with me. So we have this, a bunch of us, we kind of, we do our daily analysis call together. We have been doing this for over a few months now. And he's actually, since I have we have started working together, he has become a consistently profitable trader. One of the things that I talk a lot about is, this is something I used to do. I used to make lots of money, then I would have a string of losses, and then I would make more money, have more losses. And I would go through this cycle over and over again, and I just could not break that cycle. So over the last couple of years, I've actually gotten out of that. So now I make the profits, and I try to keep my profits. And that's what we've been working on in our group that we have. And Frank has actually, I have to say, he's done really, really well. So it's too bad that he's not able to get on. I hope he can. All right, so that's a bit about me. Now let's dive right into our trade setup that you guys have been here for. Actually, before we continue on, where are you guys from? Do you want to either put it in the chat or tell me? Are you guys here locally, or where are you from in terms of where do you live? Ireland. Hey, Amit, welcome to the call. Nice to have you here. Hey, Martina, looks like you're on. Nice. And we have Anne is from Anne, where do you live now? I was going to say you're from England. Hey, Chris, welcome from Manchester. Martina is also from England.
I was originally from England. I've relocated to the States.
Where in the States are you, Anne, right now?
In Alabama, the South, the deep South.
All right, nice.
Too hot and humid.
Cool. All right, so let's get started. So just a quick disclaimer: I am not an investment advisor. I do not have the licensing to provide investment advice as such. Hey, Frank, looks like you're here. Welcome. I'm glad you could join.
Yes, me too. Hello.
Hey.
I don't know what was wrong, but okay, I'm in now.
Okay, awesome. I was just praising you just a moment ago. Okay, so anything that I say here is for educational purposes only, and I would suggest that you test this out in your testing software, in Forex Tester or something else that any kind of, or back test it, whichever way you like to back test. So just a quick disclaimer there. So now we will get started. Okay, so this is, so first of all, let's take a look at the entry criteria for this back test of the level trade. What I like to do is I usually start off with 4-hour time frame. 4-hour time frame is my go-to time frame. I don't usually take too many trades from 4-hour, but it is my go-to time frame because it gives a full view of what's going on in the market. Sometimes you just need to, when we are trading from shorter time frames, we are almost like in the weeds. We can't tell the forest from the trees. We can't tell where the price is in relation to the bigger picture. So I like to keep that big picture in mind, which is a 4-hour time frame. And then I mark support and resistance levels at this time frame. I look for areas that prices reacted previously. So any of the major support and resistance areas, I will mark on my 4-hour chart. 4-hour charts, and then I drill those levels down to my lower time frame charts. So when taking the trades, I usually go to my 5-minute or 15-minute time frames. I like to trade from 5 minutes just because the trade set up quicker there. However, 15-minute time frame is good as well. It shows same setups as the 5 minutes does. It's just slower to set up, so you can trade either one. It's really up to you. It's really your preference. And for the trade, we are looking at, in terms of stop, I generally go with a 20 pip stop, just because 20 pips gives you enough room to to be, to not be precise, so that you don't have to be exact. You don't need to know exactly where the trade is setting up. You have the room to maneuver with the 20 pip stop, and it's also not so big that you're losing tons of pips on it. And then in terms of the trade profit, we are looking at if you're trading with the 5-minute 5-minute chart, for example, you can look for a 20 or 40 pip take profit, really depending on where the price is, and we'll take a look at that. And if you're trading from like a longer time frame, for example, if you're trading on a 15-minute chart or a 1-hour chart, you can look for those 40 to 60 pips in the trade, because the levels that you would be looking for would be deeper levels. And the only difference is that in the 5-minute time frame, or if you're really looking just to make those 20 pips or those 40 pips, you're not really looking to catch huge moves. And the thing is, you're not sitting through a lot of pullbacks. You may sit through a minor pullback and then look for the price to go further down. And if it doesn't, then you will either take yourself out of trade, or you would have hit your 20 pips. I usually look to hit the 20 pips, just because it's it's at least 1-to-1 risk to reward ratio that you're getting with that. And a lot of times we can get the 40 pip moves on a 5-minute as well. But do understand that you may have to sit through some pullbacks. So you may see some of your pips disappear, and then as price moves down, you will get those back. But be aware of that. And then again, like I said, try this in your demo account, or try it in Forex Tester, and get really comfortable with it. And then of course we'll look at one step that you can take to really cut your learning curve in half. This is something that I do all the time. I still do all the time. So we'll go through that. And if you want Forex Tester, you can go to tradingwithvenus.com/resources. There's a link there that you can go, where you can go get the Forex Tester. All right, so let's move in and take a look at what I'm talking about in this back test of the level trade. So this is a chart. This is a Euro USD 4-hour chart. On here, this is what I do. I go on to 4-hour chart, and I will mark major areas of support and resistance. And then I watch these levels. I watch as the price gets into these levels, and then I go to a 5-minute chart and see what price is doing at these levels. And then I enter the trade into these. So let's first start with the 4-hour and see, first of all, let's identify these back test of the level trades. Okay, so I have marked some of these levels here. So let's go through them. So for example, like here would be a back test of a level trade too, but let's ignore that because I haven't marked it. So here, this is what I'm looking at. So see how price moves up here, and then it forms this base. On a lower time frame, you will see some consolidation here before the price moves through. So normally in here, you will see a retracement, and then the price will just hover through this level, and then we'll do some consolidation. What you're really looking for is for the price to come back and test the same level on the other side. So you're looking for we have had the strong move up. We're looking for follow through on this move. So we are looking for a pullback, and we're looking for the trade or the price to come to exactly the same level. And this is where we are looking for a long setup. And then we get into the trade, and we have all this profit. So actually, if you look over here, it's about 0780 to 0900. So there's plenty of room for about 120 pips in there. So that's a nice move. And as you can see on a 4-hour chart, you get these nice moves that you can get into. On a 15 or a 5-minute chart, you would have been out of the trade because you don't want that huge pullback. Okay, so that's one. So this is one. So we look for the price to get to a level. We look for it to pull back from that level, then finally breaks through, comes back and tests the same level again on the other side. And we're looking for, in this case, the trend continuation on the side. And then this is another one here. See how price went to this level, which we had marked here on our chart. This is 0880, just above this one is 88, but I like the 80 levels in general. And sometimes what you'll notice is the 80 level is very important, but the price may move through level by a few pips. So in this case, I think this may have been the 106, 108.6 level. So we'll see a few pips, the price may just slip through the level. So price comes here, it bounces off of this, and this is a 4-hour chart. So price sits in this range for quite some time before it hovers through it again. And then you can see it comes and tests the same level again. And that's what we're looking for. So this is a second back test of the trade on this 4-hour chart, where we are looking for price to come through. So when price has so much momentum, we are looking for price to continue in that. And normally what I've noticed is price will make 3 pushes. So we have like 1 push, then it consolidates, second push, then it consolidates, and then this final push, which is not quite as strong as these 2 pushes. And then price is kind of, it'll retrace. So in this case, we are looking for the 3rd push up, and we are looking for price to come and test the back test this level once again. And as it does that right here, and then it powers through, and we'll be able to get our pips here. So this is, let's say 108.88 that I have marked here, and then 109.50. It came, so there are enough pips in that. There's about 70 pips in that trade before price kind of goes into this consolidation, moves up, and comes back. So those are two trades that have set up according to this. So now, as the price went up, this 50 level is important. We have marked that up on our charts. So see how price comes and so it slips through here a little bit, but has trouble with it. It's not able to hold below. And here, as you can see, the price bounces off of this level, holds above this level multiple times, and then this does this nice railroad track reversal pattern, then finally pushes through it. So this level we have established. Also, if you look to the left of the chart, when we look at the real charts, I will show you, when you look to the left, you will see at this level, the support and resistance level, the 50 level, there will be other areas where price has bounced as well. And that's how we come up with the support and resistance levels. So now, knowing that price had trouble going through this level again, as price is going up, we will look for price reaction at the same level. And this time, we will look for this level to act as resistance. Here, it acts as, so first it acted as resistance, then it became support, and now we're looking for it to act as resistance again. And we are looking for basically the price will retrace off of this level at this point. So we'll look for some sort of a reversal pattern, which could be like this, the railroad tracks, or we could look for like the double top type of pattern. So something like that, and we'll talk about that when we get to our lower time frames. So we'll look for that, some sort of a pattern here, and we will look for a way to get into the trade, and I will cover that when we get to that part. And we get into the trade, and as you can see, the trade went down for quite some time. This is, we started at 0950 and 07, actually no, maybe about, you probably want to get out somewhere in here, 0800 at least, so 150 pips in the trade. However, this is on a 4-hour chart, so you're sitting through a lot of like back and forth here. So be mindful of that. Okay, so that's another trade. So that's a 3rd trade that we have seen. And let's take a look at, this is nice back test of the trade too, but let's look at some really clear ones. So see this, how we had established this 50 level to be a nice price. So we see once again the price comes and tests this level, and then an important thing that I like to see in these levels is that I want the price to break through this level with momentum. So once the price breaks through and then it goes and does a back test, because anytime there's a strong momentum move, there will be some sort of a retracement, and that's what we're looking for. We're looking for place the retracement will come to, and then we're looking at that area to take a trade. And generally, this tends to be at like the 50 level, the 80 level, 0 level, 20 level. So some of these levels that are really common where these setups tend to happen, we're looking for those levels. So in this instance, we are looking at the 50 level to see how price comes in, breaks through, and goes in, does a back test of it. This is what I call a back test. It's just on the test of the same level, but on the other side. So we see that, and then it just drops. This one is, again, 0840. So this is a nice strong move, almost 100 pips, so 90 pip move here. That's a nice move. So then price breaks through. Again, this is another level we have marked. See how price had reacted at this level before? And then it tries to hold below. It's just not able to. And so we see, price is struggling with this level multiple times. So we have this level already marked up on our charts. And now we see price break through this and then see how it comes and tests the same level and then falls again. So in this, this is a nice level as well. So same thing here. This is back test of the level trade as well. So this is 0885-ish level, and then this is 0800. So there's about 50 pips in this trade as well. And then we see price come to exactly the same level and does the same pattern. So it does another back test and then it just drops. And then here as well, this 0780 level here, price comes. This is where price reacted. So any place you see where price reacts, especially when it's moving down with momentum, it has a reaction. So we want to look at the other side of that. So here the price first hit, it reacts, and see how price had reacted here as well. Multiple times price had trouble going through this. First it acted at over here as well. See, when you're marking a support and resistance, you'll see these levels where price just has trouble. It's not able to go through, and it reacts to that level. So here the price had a pullback, finally made it through, had another, again, reacted at this level, reacted here first and moved to the deeper level, and then again reacted at this level. So we know this is an important price point. So here we are looking for, again, this price level to be tested again. Once we see some sort of a reversal pattern, we get into that trade. And first, the trade pays us just about 0750. So not a lot of pips, but still a good trade on a 5-minute chart. And then we go in, so about 40 pips or so in here. And then it gives us another same setup again. And now we have more pips here. So this is about, let's say, just about the 20 levels. So let's say about 30 or so. So we have good levels like 50 pips or so in the trade. So this is essentially what we're looking for. Again, so this is another example here. We see price come, see this is an important level. Price try to break through and just reacts at a level, drops, and then finally makes its way through here. And then on the way back, it breaks through and comes back and does the test again at the same level. So once you see this kind of a move, you know somebody's going to take some profits off. So you're looking for a pullback, and you're looking for a pullback. If you're looking to get into like the trend in the same direction as the trend, then you're looking for a further down move. And we know, the price had gone to this area, so this is an important level. So we want price to come. We're looking for the price to come to this level. So this will be our target. So that's what we are looking for. So actually, let's look at some of the targets. So basically what we do is when we take a trade, we're looking for the price to go to the next level of support and resistance. And that's how we look at our exits. So we're looking for entries at the back test of the level that we have marked, the important level. And in terms of getting out of it, we are looking at next level of resistance. And so you could have gotten out somewhere in here, or based on how the price was moving. This 0820 level is important, so you could have gotten out somewhere in there. And we will take a look at on a smaller time frame how to make that decision. Any questions or comments so far in terms of like identifying this level? And you guys, don't be shy. This is just a few of us here. It's not a big gathering or anything. So please do feel free to ask questions, and don't feel like you'll ask a silly question. There are no silly questions, because it does take some time to really be able to recognize these things. So please do feel free to ask your questions, or if you have taken these trades or if you have worked with these levels before. I would love to hear your comments as well. So do feel free to share that. Okay, so let's look at, and I am not seeing any chats, responses, or anyone coming on, so I will continue on here. Okay, so we have this pound US dollar 4-hour chart. And same type of thing here. See, we have See how many times these trades set up. See, this level was an important level. Price kept pushing off of this level and then comes and tests the same level again. And then here too, price bounced off of here. We had a retracement and came in, tested this level again before it moved down. And here we have this level that I've actually marked, 48.50 level. Price broke through and then came and did a back test of this level and fell. And then we have this level. This is not a back test of the level trade I've marked here, but there may be something. This is a resistance level, so something that we have marked on the charts. So here, for example, let's take a look at this level, which I found really interesting. So we have price, like I said, this 48.50 level. So price came and bounced off of that one time and then twice. And this is a 4-hour chart. So we know price sat in this area for quite some time before it just hovered through this area with momentum and broke through. So when price starts coming back, so we have this, pin bar reversal pattern. So once price comes back here, see how much trouble it has. It's not able to hold. It slips through it just by a few pips and then goes down and then comes back and tests it again. So we have two times that we can actually get into the trade. So 2 opportunities for us to be able to get in, and then price comes down. So this is a profitable trade for sure. And then as price is kind of moving through, we see price reactions, we see a retracement, and price powers through. And see how when it comes back and tests, so it gets rejected here. This is a major level of resistance. It gets rejected multiple times. So as the price approaches this same level again, it has this nice draw. See how it does a nice back test here? So it slipped through by a couple of pips and then reacts again. And then it tries to come back and tries to break this level, slips through a bit more, but it's not able to hold below this level and then goes up again. And again, it just doesn't quite approach it. It stays above, finally, does another test. And then it has all these reaction points. And within that, there are multiple points where we could have, because we know the level, we know that this is a level that price is reacting at. So we don't take the trade blindly, because some of these won't work. If you just enter the trade because we think this is an important support resistance level, so let's just get in. I do not recommend that. I actually recommend looking for an entry, looking for a setup on a 5 or a 15-minute chart, and then entering the trade. So some of these trades, we would stay out of just because we would not see a setup at these levels. So especially with this one, what we would normally see on a 5-minute chart is that it's just big red candle. Price is just powering through, and there won't be a setup for us to get in. These ones, however, we will be able to see a setup. It'll be slightly higher here, for example, because price did manage to break through, and then it came and held below this level, then tried a weaker push through, and then came and held below. So we'll actually see a nice clear trade setup at this level. And see again how the price reacted here, and we have another trade setup. Multiple trade setups, the same trade setup at this level again. All right, so let's so we looked at the euro and the pound, and then let's take a look at the 15-minute chart to see what this setup looks like on a 15-minute chart. So for example, here we have this level, 106.80 level here. See how the price was coming down. See, we have a nice setup here. This is not the back test of the level trade, but just a setup at a nice level here, about the 80 level. 80 levels are very important. So you'll see a setup. See price try to break through, nice pin bar for a short trade. Then we have this double top sort of pattern, and also this star formation, which generally shows that the price may come down. So anyway, we see this price move down, and price is just kind of coming along, and then we have this nice. So when you're actually sitting in front of the charts, watching the charts, you will see this nice red candle just powering through this level, and then all of a sudden you see retracement, and this powers through, and then kind of holds there, retracement, all that. So here we are looking at, see where this price stops. That is nice. It's good to identify where the price is stopping, because usually what I find is it will come back again and test the same level. So you have that level here. And on a 15-minute here, see how price is just holding below that 50 level, which means there just aren't enough buyers in the market to buy above that. So we see a lot of, it just holds here. Nice pin bar rejection, and this is where we can actually take a trade. So based on this setup, this nice rejection off of this level, see how price just blew through here, and then it wasn't able to go up, even though buyers were trying to push it up. And again, here, very nice pin bar rejection. This is a reversal pattern that, this is one of the reversal patterns we'll be looking for. And then we can enter the trade here, and we have, this is our, we can get out here. So this is from 80 to about 0635. So about 30, 60, so it's a nice amount of profit in this trade. And then we see this, again, goes right to this place again, and see how it gives us the same pattern that we looked at here. Basically, it's a first strong candle, green candle, full blown up, and then we see two candles that come and just take it out. They engulf this, and normally we see the price go and do a test. It will pull back up, and this is the candle we're looking to get into when the price is pulling back up. So now we know that this is an important level. Price, they're not willing to go above this level, so we'll take a trade at this level. Again, I do not recommend you just go and enter the trade just because this is an important level, but I would suggest looking for this type of pattern, or looking for this, or looking for like railroad tracks where one candle just, let me find a good example of railroad tracks here. For example, let's say if we had a candle going up and then this candle coming down, that will be a reversal, railroad tracks. So something like that, one of those reversal patterns is what you're looking for at this level. Then you look for the pullback, and that's when you enter the trade. And here, see, and then if you have a 20 pip stop, it gives you enough, it kind of puts you above. So one thing you do want to keep in mind is that you're above this previous level where the price went to. So you want to be up here somewhere. And with a 20 pip stop, that would normally put you up there. So you can just take this trade on this pullback, and then it goes against you a little bit here, but it's still quite far from your stop loss. So especially when you see price doing this, that means there just isn't enough power in the price to go through. There's no real liquidity pushing it up. So you just look for you kind of sit there, just let it be. And then of course the price starts and come to the same level. So this will be a first take profit level. You take some of it out, and then it does, see how nicely it does a back test at the same level again, and then goes through. So you can have a couple of take profits in this area. So when I mean a couple of take profits, what I mean to say is, so you have 20 pip stop. So your first target is 20 pips. So you take part of your trade out at 20 pips, at least you've locked in some of your profit, and you move your stop loss to break even or break even +2. So you have, at that point in your trade, there's no risk. So you've made some profit, there's no risk in the trade, you've moved your stop loss to +2. So at that time, let's say the prices goes against you, you are still positive. You have a profitable trade. So that is very, very important. And then after that, you let the trade run, and you keep, you can adjust as the trade is running here. Once this happens and you see this candle come down, you can move your stop loss right here. And as this candle forms, you can move it right above here. As this happens, once this candle forms, you can move it down here. So you're moving your stop loss with the trade. And then you're looking for 40 pips as the second target. You take more of your trade, like some more of your trade out at that point. And then you look for your third target at which you take all of your trade out. So that way you've made like 60 pips in the trade or 90 pips, whatever you're looking for, and you're done. So it doesn't matter if the price goes another 200 pips, because you have made your profit for that day and for that trade, and you're done, you're happy. Don't worry too much about, these big runs, because all we're trying to do is engage with the market and take profits out. It's like going to the ATM machine and we just take the profits out. We don't worry if somebody else has like millions of dollars in their account. What do you care? All you're concerned about, you are able to go there consistently and you can take some profits out of that. That's what I really like to focus on and for our trading. Okay, so now let's go take a look at some real charts before we move on. So far, any questions or comments or anything to add? Anything perhaps I could explain more about this? All right, so if not, let's take a look at some charts here. And let's get rid of some of my levels or fibs that I have marked here. Okay, so this is the live chart. This is what I normally do. Like I said, I look at price action mostly. I draw my levels. This is my 4-hour, my go-to chart. I have 4-hour chart here. Then I have 4-hour chart on euro. Pound and euro are the two pairs that I trade all the time. So you will always see a 4-hour chart. And then I have, normally I go through 1 hour, 15 minutes, and 5 minutes. So each pair, I will have those different charts on at any given time. So 4-hour, 1 hour, 15 minutes, and 5 minutes. Just because sometimes you need to step back. If you're only staring at a 5-minute chart, you lose perspective so quickly, because you'll see moves, price go up and down, and all of a sudden you'll just go nuts. With all due respect, I'm not trying to be disrespectful, but I find you get too caught up in the price, and every little move just brings out emotions in you. So you don't want to do that. But when you take a look back, so you may look at a 4-hour chart, and then that price, where your next level that you're looking for is, and how the price is reacting, so you can actually adjust. So you have a full picture. You're not getting freaked out by the small price movements within the 5 minutes. All right, so let's. So this is a recent chart. This is where the price is currently. And another reason I like the 4-hour chart is that you can mark your levels on this chart, and you can leave them up for quite some time. So you don't have to keep adjusting your levels. They stay there for a long time. All right, so here we have. See how this is a nice level here. So I have marked this level on my chart, this 157.30 level. However, this level right here, so if you bring it down, this one here, see how, this is what I was talking about. So price is moving up, consolidates, moves up. And the funny thing about this chart is this is not the time frame, or this is not the chart that I had in my picture. The one that I had was way over here. This is what I had on my on the slide that I just showed you. So now, see how price moves in a very predictable kind of similar way. See price moved through, formed consolidation, came back, tested the back level of this, this level here, then kind of consolidated here, moved up, then again came and tested this level, which we had from from previous price reaction, and then moved up. And then, how I was talking about like multiple pushes, 2 or 3 pushes. So this is a third one, which is not quite as sharp as these 2 pushes. So it's just price moves in a very similar way, and you'll start to notice that as you continue on with your price action behavior here. Okay, so we have this level. The price comes and then bounces off of this level. So anytime price is moving with momentum like this, and then it bounces, reacts at certain level, you want to pay attention to that level. So we see at this level, price bounces off on first touch, and then price comes again here, and it's just not able to go through. See how it just stopped right here, and then pulled back, and then finally it was able to make through with that momentum. So we know this level is important. So on the back side, so we let the price do whatever it's doing. There's setup here, but that's a different setup, so we'll ignore that for now. So we see price come back. So the next time price comes back here, see how it reacts at this level? So we would get, as the price approaches this level, we would get interested in it. So we would go back down to we'll go back to our 5-minute chart, and we'll watch as the price is approaching this, and we will look for those reversal patterns that I just talked about. So for example, railroad tracks, which is this here. So we have one candle, which is green, and then another red candle that takes it out completely. So that's a nice reversal pattern. So we'll look for a pullback. So the same thing on a smaller time frame. So you look for a reversal pattern to form at this level. and then you're looking for a bounce off of that and see how we got that bounce. So this bounce here is, oops, 107 pips, or at least 105 pips, sorry. So 105 pip bounce off of this on a 5-minute chart. Like this is great. And you know that this is an important level, so you want to take, before you get to this level, you want to take everything out of your trade, because this is where the price had reacted before. This proved to be a strong level on the way, when price was on the way up. So you want to be out of this trade before it gets to this level, because as you can see, it bounced off of this. So that's one. So the price, so in terms of, let's mark it up here. So this is the level, and the price comes and does a back test of this level right here. Okay, so we were looking at, and another thing is, so I told you, the few levels actually, so I mentioned 3, but actually there are really 4, where price reacts. The big figure, which is 0, 0 level. So 57, 58, whatever your 0 levels are, that's a very, very important price point. And if we have a support and resistance lines like this at that level, we want to be looking at that level for a trade setup, especially if the price has broken through with momentum on the way up or down, and we want to look on the other side of it, because the chances are, probability is quite high that you will see that reaction. Okay, and then 20 level. 20 level tends to be a very important level as well, where sometimes price will just react at the 20 level and won't quite get to the 0 level. And then 50 level is an incredible level that I see a lot of price reaction, that we see a lot of these trade setups. So keep that 50 level in mind. And then of course the 80 level, which is also just like the 20 level, it's also an important level where you'll see some of these setups. So basically that's why it's very important to draw your lines first on the 4-hour chart. And then as the price is approaching that, you watch it on a smaller time frame. So see, okay, so this is one trade. And then we see, again, the same level over here, the price, once it's blown through this level with momentum, price comes and reacts at the same level once again. And at this point, I would definitely be like, I will be right there looking at this level for a reaction and look for a reversal and just get into this trade. And in this instance, if you just got tired and you could just get out of this trade at this spot, like 60 pips or 50 pips or whatever, you have that level, and then price comes in. I think this is the Asian session again, then comes and tests the top of the range here and then drops. So on a 4-hour chart, so let's say if you really wanted to get into those long-term trades, I would look for like one of these and just wait for price to kind of take its course. So here the price at the end of the day, it held low, which means there's higher likelihood of price to go down again in that direction. So you could have held on to your trade and you could have caught this big trade here. And then, you would have gotten out somewhere on this as it starts pulling back, because then because price is not holding. See here, price is holding the lows. It's not holding the lows here. So then and you look at your daily charts and you know that, price is anyway moving up, so you want to get out of that. Okay, so that's one level. And then we have this level that I have marked here. See, price kind of held above this level. This is 54.94, so about that 5,500 level. Price held above it, tested it, and then came and did a nice bounce off of that. Anytime we see bounces like that, you want to get interested. So it bounced off of this level, came and did another back test here. See how the same level continues to come into play. So price moved up, tested this level, nice. You would have seen nice patterns here. And then finally price comes and tests the same level essentially again here. And then this is what we're looking for. See how price comes back? It stops here, does another push, rejects that level, and then comes right into this. It moves here just a few pips. Let's see how many pips here. About 12 pips or 12 or 14 pips, something like that. So it's still within your 20 pip target. And then price drops. See, so you're looking for that pattern to set up, and then you get into the trade here. And somewhere in here, as the price just starts bouncing off of this level and holds, you want to get out. So that's the setup. Does it make sense? Do you guys, is this making sense? Can somebody put something in the chat and say yes, no, any questions? Feels like I'm doing a lot of talking here. Did I make you guys fall asleep? Let me get a yes or no something. Okay, perfect. Thank you. Thanks, Amit. Okay, all right. So let's, hey, Jay. Okay, good. Good to see you guys are still awake. All right, so that's one. So let's take a look at a 15-minute chart, see how we can identify some of these setups. My charts are marked way too much right here, so let's see. Okay, so here's one. I like this one. See here. So here we go. This is what it will look like on. So this is the 40 level or the 50 level. 50 level is very important, and sometimes price just has, it's within a few pips of that. So let's look at this. See, price was going up here. Sorry, it was, let's actually pull back to see what's really going on. Okay, so this is, I have marked an 80 level. Let me see if I can share that up with you. Yeah, this is the 80 level. Okay, yeah, so let's start with the 80 level first. Okay, so we have price coming down here. And then see how price reacted at this 80 level right here, and then tries to go below, isn't able to hold, pushes up and goes up and then comes back again. See how it reacts just the same way at this level. So this will be, so you could actually get into this trade here on a 5-minute chart, and this is what 26 pips in the trade. So you would hit your first profit target of 20 pips, and then you'd be out with the rest of the trade, just a partial 20 pip profit. And then it reacts at this level, does a quick back test, and then goes down and all of that. So anyways, the price is moving along, and then as it comes back up, this looks, over here, this will be, see how positive this looks? It looks like it will just break through this level and continue on. But that is not the case. We see price come in really, really strong, and then it does this. It just stops right at this level, as we have seen many, reactions off of this level. Stops right there, throws a nice pin, and then this is your Asian range for the day here. But see, and then price comes again. So you could actually either take the trade here or you could take the trade here. See how nicely this candle just takes it out? I do. Actually, I do use fibs. And the way I use fibs is for confluence. So I'll get to that. And if I don't, remind me. I will talk about fibs. Okay, so this is a nice pattern. I really like this because this is a rejection. See the pin bar on this one? The price comes up, tests it, and then is not able to hold above this 80 level and rejects with a pin. And then we see price come down, takes this very strong bar down, takes this out. Then we're looking for a pullback, and then we get into the trade somewhere in here on the pullback. And then we have about 98 pips in the trade. So you would hit your first 20 pip, second 40 pip, 60 pip target, and that at that point you could just get out, or you can leave a little bit in the trade, and somewhere in here you'd be out for sure, because it's not going anywhere, and we have multiple, price going into this level and rejecting, so you don't want to be sitting in this trade at this time. So it's a nice successful trade. So, and it's at it's backtest of the level trade at 80 level. And it's this is like a double top formation as well. If you don't know about double top, just ignore that. It doesn't matter. This is a nice back test of the level trade. Okay, so see how price had on the way down here. Price has reacted very strongly. A nice pin bar off of this level, and another reaction here, another reaction here. Now this is at that 50-ish level. So it's just below the 50 level. 50 level is kind of up here. This is just below it. So price reacted multiple times. So once it does this, we are, look, see how it reacted here as well and pulled back and then finally broke through this level with momentum. This is sort of what we're looking for. And then next time the price approaches to this level, you will get really interested. Now you're watching the charts and you're looking at some pattern to form where you can actually enter the trade. And in this case, this is a nice railroad track reversal pattern. So you can get in the trade here and then price kind of, goes against you a little bit. But your stop is at that 20 pips here. So you're still good. So the price tests the level 3 times and it's not able to break through. And finally, it shows a nice pin bar, nice rejection, doesn't even make it to that level, and then it just drops. So let's say you got into the trade somewhere in here. You are looking at about 96 pips in the trade. However, I would say you would want to get out somewhere in here with your first 20 pips, and then you want to get out with your 40 and then your 60 pips. So somewhere along the way, you'd be out of the trade. You would have had a successful trade. And this is not like made up perfect, price that I've picked. This is something that, just set up recently. This is current price, and this is the level. And then let's say you missed this trade. I find it sets up quite often. So let's say you missed this one and then you wanted to get into the trade. So you could look for something like this. So this is a nice way to enter the trade in the direction of the move. Instead of chasing the price, I would suggest you get in, you look for this type of a rejection, and then look for the back test. So this is 53.15 level. So we know that 20 level is a very important level. We normally see a lot of reaction of the 20 level. So here it's not even able to get to that 20 level. It just reacts at the 15 level, which means, sellers are interested in moving the price down and we can get into the trade. So so we can get in here. So once we see this reaction, we see this candle, we're looking for a pullback here and we would get into the trade. Now the caveat here is that we have missed this trade and we have missed this trade. So now the price is further away. It's already made this first move and now it's trying to make the second move, right? So the price is away, like it's moved away from this level, which was a really nice level. Now, what does that mean? It means the amount of profit you have left in the trade, it has decreased a fair bit. So you have to be mindful of that. So when you get into a trade at this level, you're not looking for your 100 pips in the trade. In fact, you may just get like 20 pips out, or you may just get the 40 pips out. And in this case, you would have just gotten your 60 pips. However, I would not count on the 60 pips at this point because the price could actually just have reacted just as well in here, and see how much consolidation is going on in this area. So price could have just consolidated right here and moved up. In this case, we did get over 60 pips. So just be mindful of that. So when you're getting late into the trades, there's that caveat that you may not have as much profit. So don't push the profit limit. Okay, so let's see if we can look at, if we can find another back test of the level trade. So this is nice. Actually, let's go to a lower time frame perhaps, so we can see some of this price. So this is another one that we can look at. See how this 80 level, the price has reacted multiple times, 108.80. Price goes up, and at this 80 level, this was when they were talking about Greece. Maybe there was a potential agreement being looked at. So we don't, the price just kind of caused all these moves, erratic moves. But see how price kind of hugged this level. It stayed above this, held above this, then kind of went up. So the next time price comes into this level, we're looking for a reaction. So again, you don't take action till you actually see a setup. Just because price is coming into this level does not mean that we just take that trade. We're looking for a setup. So that's very important. So you can look at a 15-minute or a 5-minute for a setup. It's really up to you which chart you trade. But we're looking at reaction. So here price comes down, see how it's a nice wick on this, which means rejection, and price moves back up. So this is nice. I like this. So you would be looking for, however, I think there was a news in this. So if there's news, just stay out. It's just not worth getting into news type, or at least I don't trade it, so I do not recommend it to other people. So this is news. So let's say for a second we didn't have any kind of news here. So you'd be looking for price to come in here, and then you will look for a retracement off of this pullback, and then you would get into the trade. So you look for your pullback here, and you would get into the trade. And in this case, you have like a 37 pip move up here, or 35, 37 pip move up here. And then you come out, you put your take profit, you take it 20 pips out, you put your break even +2, your stop loss, and you'll be out of this trade because, you know, it comes and pulls back. So at +2, you're out. You're probably out somewhere in here. And then it gives you another opportunity to set up here. So so pulls back up. This is a little bit messy here. So this is, yeah, I actually don't really like showing you this trade. I would see how price has reacted. So this is a deeper level as well. I find sometimes when you have these deeper level, like I was talking about, this is just messy, a little bit messy here. When you have this deeper level, when you have a level that's just below another level, see how close they are? Sometimes price will come to the deeper level and then set up again. So in this case, it's still a good level. So once the price like moves up here, you can look for a pullback, and then, you know, you look for your trade up. This is, however, messy. Right now, we have that Greek drama or Greece drama going on. Frank can tell you all about it. He lives in Greece. But they haven't really reached a negotiation, but the market is pricing that in already because the market, because there were stories out of Greece the other day saying, you know, they were drawing up a stop agreement. Very soon they will reach an agreement and they'll get the money and they'll be able to pay IMF off. So there was all that going on. So it created these crazy moves. So my method really is I look for price action, and this trade setup, the back test of the level setup that I'm showing you is one of, you know, I use this all the time. So this is another example of it here. For example, the one that we just looked at. Yeah. So mostly price action, and I'm looking for, see this one here is another price reacted here, came back, and price reacted again at the same point, and then it had a nice move down. So I'm looking for levels like this. So I mark, again, we go to, that's why four-hour chart is very important. So I look for these 4-hour levels on a smaller time frame, and I'm looking for reaction off of these levels. Especially when price breaks through, I'll be stalking this trade. You know, I would like look to get into this trade. All right, so that is the trade setup. Any questions or comments about that? Okay, so now the most important step that most people don't do, and nobody really talks about this, but this is a step that I use extensively, and here's the proof that I use it. I actually mark my charts. And when I talk about marking your charts, I am talking about, see when these trades set up. I've actually deleted this because I was showing my charts to someone. There was just way too many areas marked up. So what I normally do is at the end of the day, I will look, so this is a day, right? I will look for what trade setups did I see that day. So I will look for, let's say today we're talking about the back test of the level trade. So I will, you know, do this. I will see, okay, there is this 80 levels. Whether you take this trade or not, this is a step that I highly, highly recommend if you want to get good at recognizing these things. And, you know, this is something you can do on your own. It just literally takes 15 minutes. It's not very extensive. So you look for, you look to see what pattern set up that day. So for example, in this, since we are talking with the back test of the level trade, I go and I mark the charts. I will draw the level. I draw my little arrows that, like I just showed you, and I write what I saw. So here I see it's at 80 level, which means very important, time to pay attention. It's a back test of the level trade. Price has reacted before here, and price came back and reacted again. And also this on its own, just alone, this trade setup looks like, this is the one that we're looking for. It looks like double top. See how it reacts at the same, two tops, and then it comes down. So this is a double top as well. So I have three different confluence, areas of confluence, or three different parameters that make this trade a nice trade setup to take. So for example, let's say you missed this, you didn't recognize it as it was setting up. You want to go and mark your charts like this, because this is what ingrains this setup in your brain. So once you start marking these charts up, you will see this all the time. You'll start seeing these trades all the time. So let me give you an analogy. For example, let's say you go buy a car. Actually, we bought about a year or so ago, the car that we bought, we have an Audi SUV Q7. And before, I didn't really know about Audi so much. We actually went to get BMW, and we're looking for something diesel. We have, kids. So we have kids and dogs, so we wanted to make sure we got everything in it. So we were looking for a big car. And I didn't really know Audi that much. My husband wanted to, let's go check out Audi. I said, okay, let's go take a look at it. And I didn't really pay attention to all the different Audis on the street before. But as soon as we bought that car, all I saw everywhere was Audis, like Audis. I'm like, oh my God, how did these people all of a sudden decide to buy the same car that I have? And it wasn't that everybody went and got the same car at the same time. It's just that because I had it, I was experiencing the car, I could see it more. And it's the same thing with our trade setups as well. Once you start marking them, you will see them, even if, you think to yourself, oh no, I missed the trade. This is just, oh, I'm not doing so good. Don't worry about that. As soon as you start marking the charts with the trades, you will start seeing those trade setups more often. And this is one step that nobody really talks about. And I have found this to be really, really beneficial. So when I do my post-market review, which I really highly recommend for all of you to do as well, take like half an hour at the end of your day, do your post-market review, I mark my charts. So what I look in price action is different trade setups. I look for levels. Levels are very, very important. So zeros, 20s, 80, levels 50. So those 4 levels, very, very important. I look for those levels. I look for how price reacted to a certain level so that I can see, for example, price reacted at this level. When price gets to this level again on the way up, I'm paying attention here. I'm looking to see if there's a trade setup, if there will be a reaction. Let's say this did not happen, there was no reaction, price just continued on. I would be looking at this level. Will there be a reaction at this level, and what kind of a reaction? Is there a trade setup? If there's no trade setup, I look further. Will there be a trade setup at this level, because this is a level I've marked up? So I look for price reaction at different levels. That's the most important thing. Oh yeah, so all right, so let's get into that. So what I do is, so Frank and Martina, we are all on we do daily market analysis calls. We start at 8:15 a.m. Eastern time. We prepare for as the New York session opens, we do our market analysis. And let me take you through this process, actually, what I normally do in my market analysis. Okay, so this is very first thing. I talk a lot about consistency. I talk about developing good trading behaviors. And it's the consistent behaviors that lead to consistent results. So I will not promise you that you can make thousands of hits overnight, because I have been doing this for a long time, and we would all be gazillionaires if we did that. So I've been trading for about 7 years live. Yeah, so that's 7 years of all kinds of ups and downs and hard learned lessons, everything. So what I've come up with at the end of the day is a process. And that's really what my cornerstone of my trading is, that I have a consistent process which helps me create consistent results. And this is a process that, you know, like that others have used, like we have Frank and Martina. And so we all go through this process. So every morning I look at, the first thing I look at is the Forex Factory. So I look to see, so now we are at the beginning of the week. So I will take a look at what are we expecting to see in terms of our fundamentals and the economic news. I have more than doubled my my accounts. Yes, and see, I don't talk a lot about doubling the account, because that's not the most important part. Again, it's the process and the consistency. And it doesn't matter whether I can double the count in a couple of days or months. I've actually quadrupled my accounts. I've 10x'd my accounts. What's more important to me is that you can do this consistently over a period of time. So I want all of us to be marathon runners, not sprinters. Like, I'm a sprinter. I used to be a sprinter. Like, seriously, I did track and field at school, and I could sprint like nobody's business. But when it came to running like marathons, I would be dead. I would be dead in no time. And now, over the last little while, I've really focused on continuing this over the long term, which means there is some disadvantage to it in the terms of, like, let's say we talk about doubling the accounts. So I'm not pushing to double my account every month. I am pushing to have that income. Yes, and you can, absolutely. I take live trades in the mornings, sometimes during the calls, and we talk about our trades. And one of the things that we have actually put into place is that everybody needs to share a trade that they took during the week. It doesn't have to be a good trade. It just has to be a trade that they have taken, that we can talk about. Anyway, so that's if you join the daily analysis calls. And once you do that, you will see the types of trades that we are taking. And it's not just about me, it's other people in the group as well. So everybody has to share their trades, because we want to support each other in taking good, positive trades. All right, so, okay, cool. All right, so what we do is every morning we look at Forex Factory. So this is the bonus section. This is, now we're done with the backtest of the level trade. This is just something, you know, an extra little bonus thing to help you with your trading. I look at Forex Factory. We look to see what important news is setting up, because it is my experience that when there's important news coming out during the day, market starts taking into account the sentiment of that news. So here we have Monday, there's no news. Oh, sorry, this is Sunday, so there's not much coming out, and it is just in the Asian session. Okay, so Monday we have, you know, a lot of PMI numbers. PMI numbers are usually important. So manufacturing PMI here is red news. Anytime you see a red news, which is a major piece of news, you want to pay attention. And you want to look at this number here, which is the forecast number, which is what the market sentiment will be around. So normally what we see is when the number that comes out matches this number, or, you know, it's very close to this number, market will just kind of do its thing. It doesn't really have much of a reaction. But when the number is missed, for example, we would see a negative reaction. If the number is positive, we'll see a positive reaction. I do not recommend trading the news. I normally tend to stay out of the market when the news comes out. Once the news is out and we see what the price is, because you see whiplashes, you'll see a big candle go up one way and another candle go out down the other way. I have traded news in the past. I've done just fundamental trading in the past. It's not my favorite type of trading. I like to have a full view of the market, and within that, I consider myself a technical trader, trading price action. But I like to know what's going on so that I'm not caught unaware. So you will look for red news, and you would pay attention to that. And if you are already in a trade, I suggest just locking in your profits if you want to leave it on. But normally I suggest just stay out of the market, because a lot of times it's not worth it. So look for the red news, which is usually important. So I will normally go through and look for what kind of news is coming out. There is some news that's really important. For example, like this one, Australian dollar cash rate, RBA rate statement, very, very important. So Australian dollars, they cut their interest rate. Interest rate has a huge impact on Forex market. So if we don't pay attention to these type of things, we could have a lot of problems, because as soon as they cut, this is what happens. So when they cut, any country cuts their interest rate, it has a negative impact on the currency. And a lot of times market will start taking that into account even prior to that rate cut. So if the market is expecting a rate cut, you will see the currency drop. So we saw Aussie drop. I mean, if you look at the chart here, Aussie chart, look at the, let's go, see the drop? This is all, a lot of it is related to interest rate, because they cut their interest rate, the economy wasn't doing all that good. Last one was actually a cut. We can check, but last one was a cut, as if I recall correctly. It was just, it's not that long ago actually, and then we saw the market move down. Take a look. It went from 2.25 to 2.0. And I remember talking about that. So it was at 2.25, and actually I had said, I remember it was in one of the calls that Martina, if you're here, I think you will remember this, because I was saying, oh, it looks like Australian dollar did not cut their rates, and market was expecting a rate cut. And Martina said, Raman, look at your price, or you're looking at the forecast. You're not looking at the previous number, which is what I did. I was not looking, see here the previous number? I was not looking at this, I was looking at this number. And she said, no, the forecast was like, oh, of course it was. Anyway, so I recall that because we had that conversation. I don't know, Martina, if you recall, but I do remember that conversation. So it was 2.25, and actually if we could look at it, we could even see 2.25, they cut it. And actually March they raised, but then they cut. The last one was a cut. It was 2.25, then they cut to 2, and now it's forecasted at 2. So right now, I don't think they will cut it. I think they will just hold it at this point. So this is what we were commenting on. I was saying that they hadn't cut it, but they did. They did raise it. You're right, but it was before. I'm talking about the most recent one, which was a cut. Okay, so that's what those are the kind of things that I look for. You know, we want to pay attention to these things, because they really dictate where the price is going, and the large financial institutions, for example, will pay attention to that. So we don't want to trade against big financial institutions. I like to call, we like to walk in footsteps of the giants. So we kind of follow what they're doing, because they have a lot more research and a lot more data and a lot more people committed to this than we can ever do. So. Okay, so actually that's a good point. So if you see, let's say the price is doing one thing. So what market does, it takes that sentiment into account prior to that move. So normally what we would see is, for example, right now it's actually an interesting thing. So there was a lot of talk about interest rate hikes in the US dollar, and we were seeing, price moving up. And then the economic, the numbers that were coming out. So these are the numbers that we pay attention to, right? So these numbers that were coming out were not very positive for the US dollar. And then because of that, markets started taking into account, the sentiment started turning negative in the market. And the market started taking into account that maybe the rate hikes will actually not happen. And as we saw, the US dollar start taking it started taking a beating, even though there was quantitative easing, QE going on in the euro, which had driven the price down for euro quite a bit. But then we saw the big move up in euro pound. Essentially everything across every cross that had a dollar in it went in the opposite direction. So you'll see a lot of that. Like a lot of these moves are driven by market sentiments, and that's why you want to pay attention to that. And sometimes what happens is market has already priced something in. So when market has already priced in something, and you may see like a quick push in that direction, and then price goes in the opposite direction. And a really good example of that was last week actually. I think it was the euro, this one here, right here. This price reaction here was based on, if you look at, let's look at Forex Factory again. Let's go back to this one here. We had, not Sunday, Friday is what I'm looking for. So on Friday, we had US, where's the US? Here, GDP, preliminary GDP for US. It was positive. It was better than expected. The forecast was for -0.8, and it was better than expected. So we would have expected the price to go down, for the pound to go down. But see how it went down and then went back up, because so much US positive US sentiment had been already priced into the market. So if you take a look at the moves, let's go to a higher time frame, for example, even the 1 hour, for example. Let's see, see the price has just been, it's been one way for a long time here, for over last several days. There was a lot of positive sentiment being priced into the market. And then now when that news comes out, there's really, everything's been priced in, and we have had such a long stretch of one-way price move that we'd expect a pullback. And if you look at your daily analysis, I've marked this chart way too much. Let me see a chart that's not marked up. So if you look at the daily, I like marking my charts. Okay, here. All right, see how we had price was continuing to move down. We had strong price move, smaller, started with small, got bigger, got bigger. These are daily candles that we're looking at. And now price has started throwing pins to both sides, and the candle is kind of, these candles are getting smaller. Now we are actually expecting a pullback. And this is something we look at every day as well. We look at our daily candles, how they form, and what our bias is for the next day. So for next day now, this week, I would say my bias is to the long side. We have seen pins into this. Price hasn't really moved down. It's held this level really well at the bottom here. It couldn't hold below, and it started, even with that positive GDP number, preliminary GDP number, price could not push down. It just did a test of that and just pushed back up. So that tends to happen as well. So we'll get a positive news, but the market doesn't react as expected. We see the first move that kind of tends to be in the direction that we expected, and then it starts going in the other direction because everything's been priced in. So that's just some market behavior that you kind of tend to learn over time. So we do this in our daily analysis call. So we look at the daily candle. Now our bias will be to the upside. So what we are looking for is a move down first. So we would then, we look for a move down and look for an opportunity to buy. So in this case, this 5260 level, 5250 level, I would be really interested in, because price had stopped at this level before. So on the way down, I will look for the price to do a test to the bottom, to, either to this 50 level, 60 level, or even to the bottom here, this 20-ish area, and then I will look for a move up to get into the move up. So just because our bias is to the long side doesn't mean we just jump in. Again, look for that setup, look for the price to move down, hold down to that level, and then move up. All right, so that's, so in the daily analysis, we take a look at that, and yes, I do like to trade in the direction of that. Institutions are trading. Anyways, that's a whole different, whole different topic, which we do talk about a lot. However, not really the topic of the call here today. So, and if you guys do want to join me on the daily analysis calls, we talk a lot about where the financial institutions are going, what they're doing, and that sort of stuff. Because we do like to be aligned with the big financial institutions. And then there are other things that we look for, like the volume analysis and things like that, to kind of get into, to identify those moves. And, we can share how why you would not actually sell into something like that. So for the daily analysis, first thing we look at is a force factory, and then I like to look at Reuters. I like to see in the finance markets, under markets, what the markets are doing and how they are. So this is nice. This is good to see, because on Friday and Thursday, there was market sentiment that Greece would actually reach an agreement. We saw G7 meetings, which were over the last 3 days of the week. Last week, we had G7 meetings, and there was a lot of news coming out saying, a lot of news coming out saying that Greece has reached an agreement, or they're on their way to reaching an agreement, which the markets saw as positive news, and we saw Euro pulling back up, and now they're saying there's no talk about an aid, so that is so that's something to look at as well. So anyway, so we go and look at the Reuters here, because it tells us some of the things that we need to pay attention to as Forex traders. Even though we may not trade the fundamentals, we need to be aware of what's going on in the market. Just like if you play any kind of sports, just because you have a position to play on the field doesn't mean you don't look at what everyone else is doing, because what we do is in relation to the wider markets in general. So we look at the Reuters, and then we look at Bloomberg as well. So again, we go to Bloomberg markets. We look at what the equity markets are doing. If there's any other news over here that may impact our decision. For example, we look at the oil. If you're trading Canadian dollar, oil is something, this is good to pay attention to what the oil is doing, because Canadian dollar has that correlation with oil. Australian dollar has correlation with gold, for example. So you want to know what is going on in those commodities. For example, if you're trading those commodity currencies, and likewise, you want to know, if there's interest rates, if a country is doing quantitative easing, you want to know about that. For example, we saw this big move down in euro for months, and a lot of it was because of the monetary policy between the two countries. One was cutting rates. They were doing quantitative easing, which means they're pumping more money into the economy. The currency goes down when you have quantitative easing. Equity markets go up. So we want to know what other markets are doing as well. And then the last thing that I look at is a news feed. So I recommend going to, like, your broker may have a news feed, or you can go to Rand Squawk or Talking Forex, and you want to look at their news feeds. This FX Pro, for example, is just even if you open a demo account with them, they'll give you the news feed, so which is really nice. So you go to this FX Pro Squawk and take a look at the news feed. Because, for example, on Friday, we saw these, Friday or last week, we saw these moves in euro. I think it's Thursday. See, these moves that I'm talking about, they were totally irrational moves. And it was because this is exactly when the news came out on the news feed that there were talks. Greece was saying that that we would see, they were drawing up a staff agreement. They were close to getting to a deal, that sort of stuff. So you want to you want to keep an eye on that. And we take a look at options expiries, because sometimes that impacts the price. And then sometimes they'll talk about where bids and offers are. We can see these on the charts as well, but it is good. Again, I like multiple confirmations, multiple things coming together. So we take a look at here, for example, this is nice. Offers in dollar yen at 24.20 to 20.40 level. And so a lot of times what we see is the price will go into these levels and then it will reverse. And if you take a look at your feed, not always, but a lot of times they will talk about these levels, and you actually watch the chart, you'll see a reaction at that point. So anyway, so when you have multiple things that are coming together, it's just nice. It makes that trade, more profitable trade. So that's what I do. So this is our morning routine, and then we go into the charts. And in the charts, we start with the daily chart. We go to the 4-hour chart. We identify daily chart. We're just basically looking for the bias on the day. So here, for example, we saw, the bias has changed here for euro, and for pound, now we're looking to the upside. See, this was a nice pin bar. This was a good rejection of this level. And then the next day the price moved up. But see what I was talking about here? I was saying how we need to, the price pulls back first. So on the pound, I was looking for the previous level. See how price comes and tests this level and then goes up? So that's what we're looking for. Even though our bias is to the upside, we are looking for, price to move down to this previous level or even to the bottom. And then we're looking to get into the trade. So that's just a little tip for you guys, how to use daily analysis to your benefit to look for direction of the trade for that day. So that then we come to a 4-hour chart, we look at the daily, then we come to a 4-hour chart, we identify the level. So this is the level that, the 110 level was important. Price reacted there, went through that a little bit, reacted, and anyways, it went, now it's just at that 110 level, then we expect the price to actually, this is the next level, it's already drawn on the chart. So we just mark our level so we have an idea of where the price is likely to go to. And then we look for, like I said before, we look for lower time frames to take the setup from that. Okay, so I told you about marking up your charts. That's important. And now we talked about this market analysis, how I do my market analysis every morning. It's a good, consistent way to do it. And once you start doing it, you start picking out patterns. Again, it's the consistency, consistent behaviors that lead to consistent results, and you will start seeing patterns. So any questions or comments? We are a little bit over our time. So for my offers, thank you for asking. I have, actually, I am offering daily analysis calls. So if you guys are interested, if you're looking into, if you would like to get some help, and you want somebody to basically walk you through the levels, and you want to come together as a group with us, and you want to do a daily analysis, I am making this offer. So what that really means is, I'm not sure if Frank is here. He's going to not be very happy with my offer here because I'm offering an incredibly low price. So, and they have told me not to be doing this, but you know what? I'm trying to create. I'm starting out. I am trying to create some success stories. I have few people that I've worked with that have seen results. So I am essentially offering the same thing just for $99, very low price, 99 US dollars. So what I am offering is on Sundays, every Sunday at 10 o'clock, we have our calls and we walk through a trade strategy or a setup. And I teach that trade strategy. And so that's our Sunday calls. And then every day we have daily analysis calls in the morning at 8:15 a.m. Eastern. So before about 45 minutes to an hour, we go through the analysis. We look at fundamentals, economics, technical analysis, and we identify the levels where to take the trade. We look at what type of potential trades may set up at that level and how you can enter into those trades. And then at night at 9:45 p.m. Eastern, I do another call where we do a post-market review. Most people shy away from post-market review, but I believe it's very, very important because it helps you prepare for the next day. So during that call, like I shared with you, we go and mark the charts. So you'll see my charts marked up like this all the time. And that is really because we ingrain those patterns, those price behaviors into our mind. The more repetition you have with something, the more you learn. So this is like ingraining these price behaviors into your subconscious level. We are really trying to make these automatic in your brain. So that's the evening call, and it kind of prepares you for the next day. This is not mandatory. You can trade without that, but I do recommend it, especially if you're a developing trader. And then on the Sunday call, we usually work on the training. So I will come and teach a strategy. There are different strategies, different trade setups that we use. So what I shared with you, the backtest of the level is one of them. And they're like double top, double bottom. There's a bunch of other ones that we talk about. And we look for the best ways to get into the trade. So that's that. And then we also talked a lot about managing your emotions, managing the mindset. Mindset, I have found it to be one of the most important things, like managing risks, trade management, that sort of stuff all falls into mindset. And it's the mindset that helps you trade with confidence. And I believe this little system, or whatever you want to call it, between analysis, doing a post-market review, learning, growing your skills, and then focusing on the mindset is what leads to consistent profits. And like I said, my main goal is consistent monthly income. I will not show you that you can I will not say that you can double your accounts tomorrow, because I don't believe that, well, it's not that I don't believe that you can double your accounts. Absolutely, you can double your accounts tomorrow if you wanted to, if that's what you were trying to do. That's not what I am trying to do, and that's not what I recommend. And if that's what you're looking for, I'm absolutely not the right person for you, right? It has to be a right fit as well, because you'll get frustrated with me trying to tell you, or trying to teach you consistency. I talk about consistency all the time, and it will just drive you crazy. So that's not the best fit. But if you're looking to create consistent profits, I found being profitable for me was very easy. I was profitable right off the bat. What I was doing though was I would go on a winning streak, and then I will lose. And then I've got another winning streak, and I'll be all high and mighty, and then I will lose again. So I kept going through this back and forth emotional trauma, making lots of money, losing, making lots of money. And I wanted to get out of that. And that's what I recommend to everyone as well. If you want to get out of that cycle, and if you don't know where to take the trades, where to put your stop loss, if you want to find those areas and learn how to take good trade setups, then I'm the right person for you. If you're just looking to make, turn like a very, very small account, and let's say turn like a $2,000 account into a $100,000 account, I'm not the right person for that. But if you want to just make consistent income every month, I am the person you want to talk to, because that's what I focus on. So that's really my offer. And this is, normally I offer, if you are just doing the daily analysis calls with me, normally I sell those for $97 a month, US dollars. And for the training part, plus the daily analysis calls, normally I sell for $197 a month. Today I'm offering them for $99, for as long as you want to, you stay with me, you will have this price forever, however long you want to stay. And this is one time only. This is incredibly low price point where I can't actually really support, myself continuing all the time. So this is one time, because I'm looking to create some success stories. I would like to help you really, get the results in your trading. And once you, if you go to this, so go to tradingwithvenus.com/one-time offer, and I will send this to you after the call with your email as well. So I'll have the offer up for a day or so. You can go. It will give you a free 2-week trial. So after that, there will be no charge for the 2 weeks. But then after that, you'll be paying $97 a month. During that time, you don't like it, you can cancel. You're welcome to leave at any times, at any time. So there's really no issues with that. And there's also, Frank, I knew you would say that. I know. You know what? Yes, I would I would offer that. And you know what? On top of that, I would also offer a guarantee. If you're not satisfied, if you say like I'm full of, excuse my language here, I'm full of crap, I don't know what I'm doing. You go, you attend it for a month, you pay me the $97, and you think I am full of, excuse my language again, crap, you can take your money back. I will pay you your $97 back. And so you have absolutely no risk in this is at all. So if you want to take advantage of that, I suggest you please go there, and you can sign up. And I would love to have you guys join me, in creating some success. So any questions or comments or anything to add there? Okay. All right. So that really was my offer. Okay. All right, so at the end of it, I would say thank you very much. Thank you for attending. I appreciate your time. I'm hoping you learned something. Again, this is a signature trade that I take all the time. It sets up continuously, like every single day I see a trade set up by this for this setup. If you have any questions, feel free to email me, raman@tradingwithvenus.com. Again, thank you very much for your time, and have a great weekend, and good luck with your trading. Thanks everyone. Bye for now.